Week 3 update video. This is Professor Hassey, Business 635. This is our second video of this week, updating for our course topics this week. The topics: financial statement analysis and forecasting. Chapters 3 and 12 of your text. PowerPoints are located in your Blackboard in week number 3. A couple highlights what I'd like you to remember, and many of you have already studied this in accounting and other finance classes, but in our class, we need to interpret the data of what the accountants have told us. What happened? Being able to read the three main financial statements: the income statement, the balance sheet, and the statement of cash flows. Here's a little exercise that I've put together in regards to this. I have included the Tesla financial statements, Tesla Corporation, for the quarter 3. The financial statements are on page 25 through 28. You can use this to practice. If you don't have to do it, don't worry about it. This is not for a grade. This is just to give you a review. You're going to be having a case down the road where I'm going to be giving you the financial statement of a company, and you'll be interpreting it a lot like what we're doing here. This is practice to understand how to read financial statements as a finance person. The accountants tell us the profits, the debts, the equities, the cash flow. We have to interpret that data into some reasonable sense of what it tells us about the company. So, as you can see, here I am, live and in color from Claremont, California. And we're going to be taking a look at these couple of key topics in chapters 3 and 12. First of all, I've included this little background, I'll bring it up here, with the basic definitions of financial statement analysis. There it is right there. Going over by ratio analysis, this is all included on page 119 of your textbook. If not, it's also included in the PowerPoint presentation. But as a finance student who manages financial resources, you should be familiar with liquidity ratios, efficiency ratios, profitability ratios, market average ratios. And these are all described in this little handout here. And I'd like you to, if you can, practice and see how they are in your Tesla financial statements, which is a real world financial statement, which is a lot more complicated than what they talk to us in the book. So again, many of you have studied this before as far as financial statements, but also understand we're trying to gather data for three purposes: to compare our company over the last few years and how we've done, to compare our company to our competitors, and to compare our company to the industry. How are we doing efficiency-wise, liquidity-wise, profitability-wise, market ratio-wise? These questions are discussed in Chapter 3 by interpreting the various financial statements to determine that. Remember, and we talked about this in the first week, the goal of finance and CFOs and financial management is to maximize the value of a company. How do you maximize the value of the company? You interpret how the company is doing, what's your risk, what's your debt, how much profits and cash flow you're generating, and then apply that to obtaining the cheapest form of capital and finding the proper markets and places to sell and distribute your product at maximum value. Sounds a lot easier than it is, but we begin to take a look at this by analyzing the financial statements of a company, and in this case we use Tesla as our guide. Another area that I want you to study this week is from Chapter 12, Financial Forecasting. Now, what kind of financial forecasting this is? To determine what our capital needs are going into the future. Based on our current financial statements, based on our current operating profits, based on our current debt and relationships of long-term capital, is it easy or difficult to go out and obtain additional capital to grow our business? Remember, one of the key things for a company is to continue to grow and compete against their competitors. It takes capital to do that. How much capital we need. Maybe we can't go out and borrow any more money. Maybe we're limited in the amount of capital resources. Maybe we're not making much profits to provide capital. How do we operate around this? First, we have to know how much capital we need. And that is included in Chapter 12, the additional funds needed equation or model. where you determine how much capital you need based on what's the delta or the change in how much new assets you need to purchase, and how are you going to fund them. There are basically two types of ways of funding the purchase of assets: internally or externally. Internally is the creation of short-term debt, increasing your spontaneous liabilities, accounts payable and accruals. Because of acquiring new assets, you can maybe perhaps borrow more money short term. Yes, you have to pay it back in 30 days, but that money is free for 30 days. Having spontaneous liabilities pick up part of the tab. And then also, what is your profit margin going to be projected? Many of you work for companies where you have operating budgets. Why an operating budget? So you can determine company-wide what's going to be your bottom line, your profit. And you set standards and goals throughout your divisions, throughout your offices to meet that bottom line. How much profit are we going to make this year? That provides capital for the company, less the dividends that you will pay out to your ownership. Then there's also another key part of capital formation is once we determine those internal capital, all right, once we determine the additional funds needed, all right, what's left? If we can provide the necessary profits to fund asset growth, if we can provide short-term debt or working capital possibilities for capital growth, then we don't need to go out and borrow money long-term or issue new stock or find partners. We have provided our capital by internal means. But whatever's left over of the AFN equation means we have to go out and get external capital, more expensive capital. Expensive capital like bond financing, borrowing from banks, issuing of equity, maybe having some private equity partners, maybe having partners from other companies. That requires higher cost. Higher cost in the form of interest, higher cost in management, and your say of how you're going to be doing things. You have to share that responsibility, higher cost. So the additional funds needed equation in Chapter 12 is one of the basic models of determining the need for capital and how that capital is going to be funded. If it's all funded by internal capital, no worries. You can fund your growth by profits and generating the money internally. But if you need additional capital and external capital to meet those demands of your asset growth, that becomes more complicated and more costly. For example, a company like Tesla has not made many profits in their lifetime. So in order to fund capital, they have to go external. If you're not generating profits and your short-term working capital cannot supply the billions of dollars you need to operate your good business, Tesla is continuously borrowing money in the bond market, continuously getting equity partners. That's why they're getting into solar energy. They're finding partners to provide that capital for solar energy, which they feed off into their automobile industry. So how a company is doing influences its strategy to manage their financial resources. We're going to talk more about that next week. So this was an introduction to our topics this week: financial statement analysis and AFN, or financial forecasting. Take a look at this in context of the company Tesla, of which I supplied that financial statements. And then next week, you're going to be doing a discussion post where I give you a financial statement of company, and you're going to be doing some discussion posts in that regard, and that'll lead into our case number 2, excuse me. Remember, case number 1 is due this Sunday. Any questions, please let me know. I look a little disheveled this evening. I apologize. I've been down with the flu bug for the last 6 days and beginning to come out of it, but still a little shaky, so I apologize. I look like death warmed over. Ooh, creepy. But besides that, enjoy your work this week. Finish case number 1 and then begin your study with financial analysis. Thanks, everybody. Have a good week.